Thank you for joining us tonight. We're going to wait a couple minutes, see if we get some more people logging on. Just a couple housekeeping things. On the right side of your screen, we do have a chat box. We do this really informally. If you have questions at any time, put them in the chat. There is also a handouts tab on the far right, and that has PDFs of both my slides and Randy's slides. You can download that if you want that. If you missed part of this tonight, we are recording it, and we'll be posting it on the app and the website tomorrow. If you just joined us, we're going to get started in a couple minutes. We're going to give a couple minutes for people to get logged in. Like I said before, there is a chat window on the right-hand side of your screen. Anytime you got a question, put that in the chat. We'll be watching it. There's also a handouts tab on the right side, and that does have the PDFs of both of our presentations. And hopefully you're not getting snow wherever you are. So far, we're lucky here.
Very windy and a little rain, so let's hope that stays.
I just got my driveway cleared off too. All the ice melted. It was perfectly dry. Want to get started?
Sure.
Okay. If you've done this before with us, I'm going to talk about the crop insurance changes, and then Randy's going to talk about the markets. Like I said, jump in that chat window if you have any questions at any time. We'll keep an eye on it. I always start with this slide. This is where the revenue prices are right now. This is actually back as of Friday. Markets were closed on Monday, and it takes RMA a day to update the prices every day. Corn, we're sitting at $4.59 right now versus $4.70 last year. That has jumped up a little bit as the month's gone on. Soybeans, though, we're sitting at $10.98 versus $10.54 yesterday. We might have broke 11 today. We'll have to see tomorrow morning. Sunflower prices are really good because those are based off soybean oil. Canola is based off the Canadian canola market. That's higher than last year. Wheat and durum not in as good shape. We're seeing lower prices there, and those markets just haven't moved much this month. So we need something good to happen to try to bump that price up for the last few days we have. New things. We actually do have probably more new things than normal, partly because of the Big Beautiful Bill, and we'll get to that. One of the changes, though, is omega-3 is now available as a separate type of canola only in North Dakota. You can use the contract price. We just need the contract by acreage reporting, but you have to put the CP option, the contract price option, on your policy by March 15th. If you're on the Minnesota side and you want to grow omega-3, you can do a written agreement, and they'll just base the rates off your closest North Dakota county. Written agreements are also due by March 15th, so let us know if you're in that situation. Triticale was in a couple counties last year. It's been expanded to all the blue counties. We didn't have many date changes up that northern tier of counties in Minnesota. They did change the initial plant date of corn from April 21st to April 15th. And that was about it for date changes. Beginning farmer rancher benefits have been expanded. Used to be you got 5 years of benefits and you got 10% added to the subsidy. Now you get those benefits for 10 years and you start at a 15% subsidy, extra subsidy, and then it works down over time. Also with beginning farmer, your admin fees are waived. Your yield adjustment, where you have a bad yield, is increased from using 60% of the T yield to 80%. The rules for using the previous producer's history are relaxed. So the question we've been getting is, what happened if I had benefits and they expired? So just as an example, okay, you started farming in 2018, you filled out the app, and you got your 5 years of beginning farmer rancher benefits, 18, 19, 20, 21, 22. Then they expired. You then continued to farm 23, 24, 25. Unfortunately, those years are going to count to your 10 years, even though you didn't get the benefits those years. Now that you farm for 8 years total, you can jump back in and get those beginning farmer rancher benefits for the last 2 years, the 26 and 27 crop year. If you haven't switched insurance companies and your benefits expired, they have all that data. They're just reinstating people. If you switch companies, you would have to reapply with the new app. Another big, beautiful bill thing, we had an increase in subsidy changes even on the basic and optional unit side. The numbers highlighted in yellow is where it changed. So for example, 75% optional units had a 55% subsidy. That's gone up to 60. On the enterprise unit side, 75% coverage now has the max 80% subsidy. In addition, SCO and ECO also went from a 65% subsidy up to 80%. We had quite a few people that bought ECO last year, and you should see cheaper premiums on that with that subsidy increase. Prevent plant changes. This was the not good news. They removed the insured from the 1 in 4 requirements. That was a good thing. You still have to show the land was planted and harvested in one of the last 4 years, but it used to say planted, harvested, and insured. And so they just took the word insured out. The bad news, I'm sure most of you have heard this by now, they did remove that buy-up PP option. The PF option added 5% to your PP guarantee. That has been completely removed. It's been taken off all the policies already. The reason for that, supposedly, is it because Congress does enough ad hoc disaster payments that it is not needed. There are some farm state senators trying to work on getting that back. I don't think that can happen for this crop year. I think it's just too late, but there are some people working on trying to get it back going forward. And so I just did a couple examples. Well, first of all, this is where we are for PP factors now. This is what everybody gets. You can't buy up. So now corn, most of you took that option. You were at 60% of your guarantee. Now corn PP is at 55. Soybeans and wheat are at 60. And then I did do some examples. So I went back to the last year in the quoter and quoted with and without that PF option. Depending what your yield is, you're going to lose about $20 to $30 in PP coverage per acre. On the corn side, from 40 cents up to over $1, depending on where you are. On the soybean side, you're going to lose about $12 to $20 of PP coverage. And that was pretty cheap. That was, 40 cents or less. So it didn't cost you very much. Not going to see a big premium decrease on the soybean side. This is the main thing this year. We have a new insurance plan called CLIP. CLIP stands for Crop and Livestock Income Protection. And we're going to throw out the livestock part. You can still have CLIP without livestock, works just as well. What CLIP does is it provides umbrella coverage on top of your RP policies. So you could have wheat, corn, and soybeans on an RP policy at 75%. You could take CLIP up to 85. So up to 75, it works just like normal. Each of your crops stands alone. That 75 to 85% chunk of the pie is going to be basically a whole farm unit. We're going to throw all the crops together, and you have to have a loss on all of your crops overall to get a payment. And we'll go through some examples. You can add ECO on top of this. You cannot use SCO because SCO and CLIP are basically covering the same spread. And you have to have your RP and CLIP coverages at the same insurance company. It's available in the blue states. So if you're on the Minnesota side of the river, you can wander in the kitchen, get a snack or something, because this does not involve you right now, which is too bad. For northern Minnesota, it would have been a good thing. Southern Minnesota with the corn and soybeans, it wouldn't have been a big deal. But this does cover all the RP crops, which is most of them up here now. The only livestock policy eligible is wean calf, and that's in 4 different counties. It's a pilot program. It's not very popular. It is not available in North Dakota, and you do not need livestock to have CLIP. The LRP insurance is the popular one, and that has nothing to do with this. It's not included. So to qualify for CLIP, you have to plant acres on at least 2 RP crops in a county. Wheat and canola, corn and soybeans, whatever. Not all RP crops are required to have CLIP. So again, you could have wheat, corn, and soybeans all on RP. You could choose just to put the wheat and soybeans on the CLIP coverage and ignore the corn. PP acres are not part of this. The barley endorsement cannot be on your policy to take CLIP. The minimum liability for any crop is 10% of the total liability of planted acres, meaning you can't plant 1,000 acres of corn, 1,000 acres of soybeans, and then 15 acres of wheat, because that's not going to be 10%. You have to be careful on this, because if you have a lot of PP, that's going to skew. We only look at planted acres. So we have to be careful for that if you're worried about PP this spring. If you don't have the 2 crops, if you don't have at least 10% on one, the policy is canceled because you don't qualify. I was trying to think of the best way to explain this because it is kind of confusing. So if you look at this, we got soybeans, wheat, and canola. They're all at 75. Well, soybeans and wheat are at 75% RP. Canola's at 70. Doesn't matter. You can take optional enterprise, a mix of them. We don't care. So on our soybeans, we've got $330 of coverage an acre. The wheat's $270. The canola's $280. So if you have a loss, we're going to look at each crop separately, just like we've always done. But for that CLIP part, we're going to throw your wheat and soybean and canola production all together. And it has to be below 85% of your guarantee of all the crops together to get paid on this. In my example here, I've got 2 crops at 75 and 1 at 70. So my little red bar goes lower on canola. So in canola, we're going from 70 to 85%. So 15% more coverage. Corn and soybeans, or wheat and soybeans, are just the extra 10%. All my examples pretty much are 75% RP because that's the most common, and taking CLIP all the way up to its max at 85. You don't have to do that. You know, you could have your wheat at 65%, canola at 70, soybeans are 75. CLIP could go to 80, CLIP could go to 85. You got a lot of options there. Just has to be 5% over the highest RP coverage you have. This is probably hard to see. Just a couple examples of how this would work. So the blue is your RP coverage, and that's the same as it always been. Every crop is on its own. The red is that CLIP coverage from 75 to 85, and the yellow is what you actually harvested. So in this case, we have a drought. We've got corn, soybeans, spring wheat, and on all 3 crops, you did not hit your 75% of your guarantee. You didn't hit that top of the blue. So you're going to have a pretty good RP loss here. You'd have, in this scenario, a $266,000 RP loss combined. And then again, you didn't get any coverage or any production from 75 to 85. So you're going to get 100% of your CLIP liability, which in this case would be another $177,000. So this is the best case scenario for CLIP. We have a drought or some other kind of weather situation. None of your crops meet your guarantee, you'll max out clip. The other scenario, in this example, same starting point, but now you had a really good corn crop. Your corn is 100% of your APH. You had a small loss on your soybeans. You had a $41,000 RP loss on your soybeans, and your wheat was a little bit over your RP guarantee. But because your corn performed so well, and for the clip part, we throw all three of those crops together, you do not have a clip loss. So just be aware of that. It works just like enterprise. You know, in enterprise, you could get held out on a couple units. The rest of your units look great. Those units override the held out units. Same thing with this, except now we're putting multiple crops together. We were talking about this today, that if you're interested in this, we can go back and look at, you know, if you had losses in 2023 or 2020 or whatever year, we could go back and do the math and see if you would have had a clip loss. That'd be pretty easy to do. So to complicate this, this is a 508H product. That basically is in the crop insurance rules that private companies can develop products. When a private company does that, not all insurance companies are required to offer it. So for whatever reason, of the companies we write with, AgriSampo, Great American, and NAU are offering CLIP. ProAg and RCIS are not. So if you were at ProAg or RCIS and you want CLIP, you are going to have to transfer your policy to another company. I'm going to throw a lot of examples at you here. I just kind of want you to get a feel for where these premiums sit. First thing I'm going to say is if you grow corn and soybeans and it's about a 50-50 split, this is not for you. Interestingly enough, mix of crops matters way more than acres. My top example is Barnes County, where I had over 3,000 acres of corn, over 3,000 of soybeans spread across 17 sections. And the premium wasn't much different than Stutzman County with just 300 acres and 2 sections per crop. That rate on the far right column is just the clip premium divided by the guarantee. Corn is the worst. Corn is always the highest rate. I'm not sure why. Corn kind of messes us up a little bit. So if you're straight corn and soybeans, we can sure quote it for you. If you're 75% soybeans, 25% corn, you know, it'll be different. We could quote that if you would like us to. Really works better though if you have 3 or more crops. So now let's switch over. This is Ramsey County, North Dakota. Here we're planting 4 crops. Everything is 75% enterprise, just because I wanted to kind of keep apples to apples. You do not have to have the same coverage on every crop. You don't have to have enterprise. So we have 4 crops, 500 acres each. So for example, if you look at canola, at 75% RP, you're going to have about $400 of coverage for a little over $11 an acre. That clip is going to add another 10% from 75 to 85. You would get another $53 of coverage for $2.37. And that's pretty reasonable. Corn, again, corn's our problem child. The corn is going to be $5.88. Now you're getting more coverage. You're getting $67 of coverage per acre on the clip. But when you look at the rate, it's an 8.8%. It's higher. Soybeans and wheat are pretty reasonable too. So you look at that and you're like, yeah, I don't want to pay that $5.88 for corn. And my corn yield's great. I'm not worried about it. It's probably going to kick me out of my loss. Let's take that out. And we can do that. We do not have to insure all our RP crops on clip. So now if I do the same quote and I just throw the corn out, our premium does go up because we've changed the risk. We've changed how, you know, the risk is between crops. So it's going to be a little more expensive, but not crazy. And again, you're saving that $5.88 an acre because we took corn out of the equation. And this is where this gets complicated. Quoting for this gets messy. You guys have a plan, obviously. Our weather here can totally change your plan. I think we almost need to quote this with like a best case, worst case. You know, this is my plan, what I want to do, but if it's a really wet spring, I have a bunch of PP. This is maybe another thing we should look at just to see how much the premium varies. So in this example, same as the previous slide, except now I've skewed my acres. Now I have way more canola acres than anything else. And again, that's going to increase my premium. And so just be aware of that. We don't want anyone getting sticker shock when they get their bill in the fall. So we want to quote, you know, at least a couple different scenarios just to make sure you know what the range these premiums may fall depending on what you plant. We did have a question in the chat. Is there a date when you can drop out of CLIP? No. The only way you can drop out of it is if you don't qualify. Now, I did have the question, and I need to get this answered. If you sign up for 3 CLIP crops and one of them is 100% PP, I'm not sure if you have CLIP coverage on the 2 remaining or if it's canceled because you didn't plant on all 3. I'm looking for an answer to that. But that's a good question. So again, kind of trying to make some comparisons here. If you think CLIP is a bad idea, I don't want to combine all my crops together. Another way to get that coverage up to 85% would be doing SCO. And most of you guys now know how SCO and ECO work. A lot of people bought that last year. So just as a review, CLIP would cover 75% to 85%. And whether you have a claim depends on what your farm did. SCO covers 75 up to 86, so you get a little bit more coverage, but now your payouts are based on those county yields. You're going to have a county expected yield, a county final yield. The subsidy on SCO is 80%. If you take CLIP to 85, you only have a 56% subsidy. So in general, the SCO will be cheaper and you'll get a little bit more coverage because we're going to 86%. Now, in this example, this is still that Ramsey County example. My soybeans and my wheat were actually cheaper on CLIP than SCO. So whatever's going on rating-wise there. Okay, so just keep that in mind. So the next step would be then, well, let me back up here. Because CLIP and ECO are both going up to that 85, 86%, you can't take both. You've got to take one or the other, or neither. But the ECO starts at 86, so we can add ECO onto CLIP. And again, here's that same Ramsey County example. ECO, you can either take from 86 to 90, or you can take from 86 to 95. We had quite a few people do the 95% ECO because that's getting your loss trigger up as high as you can. But just for something to think about, again, if we look at canola, if we did just the ECO up to 95, we'd have $48 of coverage for $4.26 an acre. If we did CLIP to take us from 75 to 85, and then ECO picking up there, taking ECO 86 to 90, on the canola, we'd have $74 of coverage for less premium than doing the ECO 95. So just something to think about. And again, the CLIP is based on your farm. The ECO is based on those county yields. And again, we can quote all this stuff for you. And then I'm not going to go deep into these, but just some more examples I've done, just kind of bouncing around the state of North Dakota. This is Rolette County, canola, soybeans, wheat. Those were ballpark with Ramsey once we got the corn out of the mix. Emmons, here we have corn, soybeans, and sunflowers. And again, the corn, that's got a 13% rate on the CLIP. Again, if that was your situation, we could throw the corn out and just re-quote clip at just the soybeans and sunflowers, see where that is. Now we're out in Stark County, Western North Dakota. And I just highlighted this one to show that, you can do different things. I've got my canola, 70% optional units. Corn and sunflowers are 75 enterprise. My wheat, 75 optional. We can do all that. This one it was silage corn instead of grain corn. And that is the lowest corn rate I've seen for the clip. And again, it's reasonable premium. So to back up on that, basically clip, if you're growing corn and soybeans, probably not a good idea. If you're going 3 or more crops, I think it's worth looking at. And we could compare that versus ECO. We want to do at least a couple different scenarios. If you are with NAU or AgriSampo right now, this is a piece of cake because they can quote it. Great American offers clip, but they don't have a quoter for it. And so if you're not at AgriSampo or NAU, we're going to have to just kind of create a really rough quote with a couple APHs and quote it. I can't enter every APH in another company's processing system to get you a perfect quote. So just know if you're coming from a company that doesn't offer it, it's going to be a rougher quote, but we'll do our best to quote you as best we can. Moving on. We talked about SCO and ECO, how those work in regards to clip. Not going to go over that again. The big changes this year, like I said before, the subsidy for SCO and ECO is now up to 80%. The other big change is it used to be if you took ARC at FSA on a crop, you could not take SCO because they were covering the same thing. They threw that out. So now we don't care what you do at FSA. You can take ARC, you can take PLC. It has no effect on crop insurance. The downside, of course, of these county plans, the SCO and ECO, is we don't know these final yields until spring. So you're going to have to sign up for 2026 by March 15th. We won't know if the 25 ECO and SCO paid out until either May or June, depending on the crop. So the question we get is, am I going to get paid? And we don't know. We have so much USDA data at our fingertips, and county yields are not one. The best we know what the price is. These use the same price as RP. So we know the canola price dropped 1.9% from spring to fall. North Dakota's yields were up 12% from last year. Nationwide canola was, I think, up 12.6%. Odds probably aren't great. You have a canola payment coming. Unless your county didn't follow North Dakota's 12% and you're an outlier, it's possible. Corn, we had a nice price drop. The price dropped 10%. However, both North Dakota and Minnesota set new records for the corn yields. Probably not going to see a lot of corn ECO or SCO payments. Soybeans, our price only dropped 1.8%. I wish that would have dropped more. North Dakota's yield was down 8%. So we could see some soybean ECO payments. Probably wouldn't go down to the SCO level. Minnesota, though, your yield was up 16.7% and a record. I'm sure southern Minnesota probably skews that. So again, you'd have to look at what you think your county did. Same thing with spring wheat. We had a 13% price drop. But North Dakota's yield stayed static from the previous year. Minnesota actually went up and set a new record. And I was playing with some math with some different counties, and we were seeing soybean ECO payments in a couple, wheat occasionally, not much for on the corn side though. Anything to add to that, Randy?
No, it's just that, we've got to wait a while before we're going to see where the final yields come in. And it does look like, for the most part, they'll track kind of what we've seen as far as the state yields did. So it does I wouldn't hold my breath on corn, like you said. Soybeans, there's going to be some counties that do pay out, especially those that got hit with frost a little harder than others.
Okay. I got a few slides on some of the different farm programs, so they've got quite a lot of those out there right now. The Farmer Bridge Assistance payments are just a flat $1 per acre payment. Those should go up by the end of the month. And all those rates are sitting there. SDRP Stage 2. For SDRP Stage 1, if you had a crop insurance loss, you just automatically got an SDRP Stage 1 payment because they had all that data. For Stage 2, it's either shallow losses where you did not have a crop insurance payment, but you still had a little bit of loss, or quality losses, mainly on wheat. What we're finding out there is that most people, if you had a wheat quality issue, it was bad enough where you did have a crop insurance claim. You cannot double dip. If you had a wheat harvest loss and it got paid in Stage 1, there's nothing we can do for Stage 2. You got paid already, you're done. The one glitch in this, if you had a PP loss, that got paid in Stage 1. It's possible you still have a shallow loss on your harvested production, but they coded it wrong. And so if you had a PP loss, it just kicked the whole crop out, and it should not have. I have not heard if they have a fix for that yet. So we want to do the math on that, and we will help you do that. If you send us your application, we can work through that. Randy's got a spreadsheet. We've done a few of these because we don't want you to miss a payment. I don't know what the fix is. I've had some counties say, wait for the fix. I've had other counties say, just get your app in and handwrite it in, and we'll take care of it. If you have a quality loss that did not have a crop insurance payment, we've got to put it through this form. It's a spreadsheet kind of thing. We will need all of your assembly sheets and the production split out by unit. And we can, again, we will do that. Send us your app, send us your assembly sheets. We'll go through all that math and determine if you have a loss or not. And Randy, you've done some, and we haven't seen a lot of losses on the Stage 2 side.
No, not a loss. They've been pretty shallow, but we have, come across one where it was paid as PP corn, so corn wasn't on it, and there was a shallow loss in the corn, so that was good to run the numbers. Barley has been showing up as running a few shallow losses with barley, and I think we even had soybeans show up as a shallow loss in one county. So it's been small, but there has been some showing up.
And you're entitled to the money, so regardless of how small it is, we may as well take it up on it. So if you have not done that yet, we are happy to help you work through those. Sign up deadline for that is April 30th. Arkin PLC, again, a lot of this stuff is Big Beautiful Bill related. For 2025 only, you will get the higher of the ARC or the PLC payment. Because of all the other changes they were making, that was just the easiest way to resolve that. For 2026, normally ARC and PLC sign up is March 15th, the same as crop insurance. They made enough changes to that program where they've got a lot of work to do. They are not ready for sign up. I have heard sign up will be after planting. I've heard this fall. I've heard maybe into 2027. Actually, the later the better. The later it is, the more data you're going to have on how this year's crop is doing and where the prices are. And again, there's no connection anymore between SCO and ARC. So we don't care what you do at FSA on the crop insurance side. They made quite a few changes to ARC and PLC. The Olympic average is now using 88% instead of 85%. We have all new statutory reference prices. I have a slide for that coming up. Your ARC guarantee is now 90% of the benchmark revenue versus 85 prior. On the ARC County, they changed the cap on that as well. So some good changes there. And these are the statutory reference price changes. Soybeans, for example, went from $8.40 to $10. And again, this is kind of the floor. We still do that 5-year average and throw out the high and the low. Corn went from 370 to 410. But again, once we start looking at that Olympic average, as of January 12th, this is where we were sitting at for the 2025 prices. So on the previous slide, soybeans had a price of $10. Actually, in reality, we do the math, it's actually $10.71 as of last month. Corn sitting at $4.42, wheat's at $6.35. And again, those will not be official until this fall when the marketing year ends. Last thing for that, they are going to let you reallocate base acres, and there's not a lot of info on this yet. I think that's probably at the bottom of the list of priorities they have right now. If you added acres between 2019 through 2023, you can reallocate just those acres you added. It's capped 30 million nationwide. They'll be prorated if they exceed that cap. That's really all we know. There is not much information on this yet, but if you've been picking up more land, be aware of that and watch for more information to come on that. Last couple of slides are just reminders. March 15th is the deadline to pay your premium. If you do not pay it by March 15th, you are put on the ineligible list and you cannot buy crop insurance for spring 2026. You will just have to go without. We do not want that to happen. It used to be you take it to your post office, they postmark it. As long as it was postmarked by March 15th, we're good. However, the Postal Service has made some changes. They now postmark at regional processing centers, not your local post office. It is not the date received, it is the date is processed. So we don't want you to pay your premium on March 10th and then have that envelope sit somewhere for 10 days and now it's too late. So if you still owe premium and you want to pay by check, I would do it by March 1st at the latest. You can always go online, pay it online, and then you know it's paid. I've also been told you can go to your local post office and request a manual postmark, but you'd have to go to the counter and not just throw it in your mailbox. RMA has guidelines for reinstating policies because of this whole postmark issue. They're pretty vague on that. And again, we don't want to be in that situation. We want this all taken care of before March 15th so we don't have a problem with this. And my last slide is just a little reminder. If you have not sent your production report in yet, we would like it. It makes quoting a lot more accurate. It's hard to quote, especially personal T yields. It's hard to calculate those if you haven't sent your production in. It's hard to look at options. CLIP is harder to quote without it. So get that in if you're done. If you are hauling grain in and you're not ready to do it, give us some generic numbers we can use for now just to plug it in. And it's not official until we put the dates in, the signed dates in, so we can put some temporary numbers in and change it later. That is all I have. And unless anyone's got any questions, I will turn this over to Randy.
There is one question up there about.
Oh, that is a good question.
Yeah.
I have not seen that yet. Hail is one of those things like North Dakota. I think the hail rates have to be submitted to the state by early February. So a lot of that is not finalized yet. I haven't really looked at the hail rates yet. But I'll put that on my to-do list to kind of keep an eye on that when they come out. I haven't heard anything yet, but that doesn't necessarily mean anything this early.
Yeah, it's usually end of February about the time frame we kind of see what the hail comes in as. So, but
in different states, all have different deadlines when they have to be approved by the state insurance department. So it varies.
Okay, well, I guess I'll try to be somewhat encouraging here, but first off, I'll do the easy part. That's, of course, the disclaimer that we've got to put up saying that there's risk involved in futures and options trading, and that, past performance is not indicative of future results. And so that makes us legal for NFA reasons. One thing I'd like to take a look just to kind of is what's more interesting than anything else, and that is when you take a look at the principal crops. Each state has a number of principal crops that they raise. North Dakota is the largest state that plants principal crops. We actually plant more acres than any other state in the union, which I found to be kind of interesting. North Dakota leads with 24 million acres that are planted to, I think it's like 19 or crops, the major crops. And then we also have the largest or second largest as far as harvested acres are concerned. Iowa did beat us out there. So it comes down to the fact that, when everybody says that North Dakota doesn't matter, North Dakota does matter when it comes to looking at all the crops. And we're right up there in most of the crops as far as number of acres, at least in the top 10. When you look at where we saw increases, all the blue states saw increases in principal crops planted and harvested for 2025. Everybody in red showed a little bit of a decrease. And where the decrease is coming from, we're not quite sure. Some of it could be urban sprawl or just acres coming out of cultivation. But now, starting off with wheat, it's not the good one to start with, but it's one that I always start with because it's the first one we plant. Wheat's been struggling, to say the least. And a lot of that is due to just because of how much wheat's around the world right now. We did see a nice little recovery here over the last couple of weeks or the previous couple of weeks, mainly because the funds were in doing some short covering. We got March's futures are coming up to first notice here at the end of February, which means that anybody who's long has to exit their positions. Pretty much it means that anybody who isn't in the commercial, in taking or delivery of grain is out of their futures positions. And that has caused some of the funds to cover their short positions or look to just go flat in the wheat market. And that's helped to support the wheat market as of late. When you look at the reports, we really haven't seen anything big as far as news for wheat. The last USDA report saw no changes to our old crop 24. We saw some small decreases to new crop, the 2025. That was a 5 million bushel decrease in the food demand side, which isn't good because when you look at food demand, I mean, that's basically the consumption for bread and for pizza, dough. And as our population continues to grow, we're not seeing that increase. So that's a little bit a little bit of a disappointment to see that. Also looking at it, our stock sitting at about 931 million bushels for the U.S. That means that, we're pretty comfortable as far as our stocks are concerned. Now looking at the winter wheat acres, what was surprising is that everybody was anticipating lower acres because of the price. There was also some trouble down in the winter wheat region where they were being awful wet and they weren't able to get the soybeans harvested to come in and plant the wheat afterward. So everybody was anticipating at least a 3 to 5% cut in acres. I was looking at for being closer to 5 to 7% cut. Instead, it came out about steady. And where the big changes came was in 2 states. And you can see of the top 5 states that raise winter wheat, Texas and Oklahoma were the only ones that saw an increase in acres. Actually, Kansas, Colorado, and Montana all saw decreases, with Montana showing a pretty good decrease as far as acres are concerned. When it comes down to it, like I said, acres are virtually steady. Now, we don't know where the harvested acres are concerned, and I think this is one of the things we look at that could be somewhat friendly to wheat going forward, because I think some of those added acres aren't going to be harvested acres. When you look at it as far as the states are concerned, like I said, everything in red saw decreases in acreage. Everything in blue saw increases. And surprisingly, the increases came in some of the states that are right now the driest, or actually seeing the biggest decreases in crop ratings. Oklahoma, Texas, New Mexico. We did see some as far as the soft red area over in the Delta states saw increases in acres as well. But this gets kind of busy, but really what I want to show is the 2 states that showed the biggest increases. One of them was Texas, which it's cut off here, but they increased their acres by 100,000. And we saw Oklahoma increase their acres by 650,000. That's a pretty big increase for Oklahoma and Texas. And I think part of that, or most of that, was done to basically for winter wheat pastures or to let the calves graze out. They've got kind of the best of all worlds in the winter wheat region, whereas they're harvested or their insurance is bound in the fall. So they plant the winter wheat, they've got insurance on it. If the crop doesn't look good in the spring, once it starts coming out of dormancy, they can graze it out, graze it down, and either take an appraisal and collect the insurance or just abandon it and run it as feed through the cattle. Or if it looks good, they can run it through and actually go through and actually harvest it. So I think that's where a lot of those acres are going right now, especially in Oklahoma and Texas where the conditions are so poor, is that they're going to be used for winter wheat pastures for yearling calves. They're going to get a lot more money out of running those calves on those and putting the rate of gain and then coming around and selling them. So I think the big thing that we're going to be looking at is what happens when this crop starts coming out of dormancy, where the acres are going to fall, and then where the harvested are for the winter wheat. I do think spring wheat acres are going to see a little bit of a cut, mainly because of how last year went. Rumors are, and we were up in Rugby here a couple of weeks ago and did a presentation and then kind of just did an informal survey, asked the producers there how many guys were looking at cutting back on wheat acres and how many were looking at increasing corn, off of the rumor that we heard that 79 to 83 day corn varieties are basically sold out up in the northern regions. And pretty much all of them in the room were shaking their head that that's what they were looking at doing. So it's kind of interesting. Right now, corn might have changed a few minds with what happened with the report here last month, but corn is also holding up fairly decent when you look at it in the big picture. Basically here, what I'm showing is where the biggest demand sources are for wheat. We basically have four. As I mentioned, the blue line is food demand, and since 2008 to current, it really has not changed that much. It's increased by 50 million bushels, which is pretty small. The red line is exports, and in 2023, we had the lowest exports in wheat in 40 years. So that was not a good sign as far as wheat is concerned. Now we started to see exports increase, and right now we're sitting at about 900 million bushels is what we're looking at now. Pretty big increase over just a little bit of time. We kept saying that exports is what we needed to improve for wheat to make the market better, and we've got it, but it hasn't helped improve the market as much as we were hoping for. When you look at feed demand and seed demand, neither one of those really amount to much right now. Basically, feed right now, wheat is the only thing that makes it as far as feed demand for wheat now is anything that's really poor quality. Everything else is pretty much running through exports or through the mill. But again, kind of disappointing as far as the fact that we can't see our food demand increase, but then our exports are seeing a nice little jump, but not enough to make a difference. And when you look at it over the last, this goes back to 1972, we're still at the lower end of our ranges as far as exports are concerned when you look at it in the big picture for wheat. And part of the reason, looking a little bit more at exports, are for sales for our 5-year average, we're actually just a little bit off of the top of our 5-year average, but we are definitely looking like we're going to make USDA's projections, which is the orange line. And for the most part, who's been buying our wheat? Mexico has been our biggest buyer. They've been pretty consistent with picking up a lot of our wheat. Next comes in the line would be the Philippines. We've been seeing South Korea coming in as a pretty good sized buyer. Most of the Pacific Rim countries. China's bought a little bit of wheat, but not much. But you can see that almost every single country, other than the Philippines and Taiwan, and China, has seen a pretty significant increase as far as imports of U.S. wheat over the last year versus where they've been. So we have seen a pretty nice increase. It just hasn't been enough because of, when you look at the major exporting countries, all of them are producing record crops right now. The last 3 years, we actually saw some of the tightest stocks as far as the world was concerned, taking China out of the mix for wheat. But that certainly was made up this year when we saw the big jump in production. We did see, the European Union, Argentina, Australia, Canada, All of those produced record crops this last year. Really only two that didn't, as far as major exporting countries, was Russia and Ukraine. And right now, Ukraine is seeing an increase, potentially increase in their production for 2026, as that's now estimated back up at 91 million metric ton. And that kind of took the wind out of wheat sales the last couple of sessions. When you look at it for production, EU is the largest producer of wheat when you look at the major exporters, mainly because, and a lot of that is kept domestically. It's kept within the 27 bloc countries. The next biggest then is Russia, that actually enters the export market, and then followed by the US. Looking at as far as exports are concerned, Russia is by far the largest exporter of wheat in the world. They've continued to kind of control that market, especially over the last 5-6 years. What's interesting is after we made a trade deal with India, India actually agreed to buy some of our soybean oil and import some of our other U.S. products or egg products. That didn't go over well with the people of India, as it increased their bean oil in country by about 10%. They didn't like that. So to appease the residents of India, the Indian government said that they were going to export 2.5 million metric ton of wheat now this year. So now we've got some more wheat that's being dumped onto the export market that we were not expecting to. And that also added a little bit of pressure to the wheat as of late. India and China are not usually exporters of wheat. They consume pretty much everything they produce, and they actually import because they don't produce enough. But now, because of India had a good crop the last 3 years, they had enough surplus, and to appease the farmers there, they're going to let them export about 2.5 million just to help make up for the loss that they're going to see for the bean oil. Or vegetable oils. Looking at ending stocks, of course, U.S. continues to hold the largest as far as the ending stocks are concerned with wheat. It kind of shows that, our stocks have been building over the last 4 or 5 years. Now, I would expect a little bit of downturn here in 26 if we see these acres drop, and that's really what it's going to take for this market to see a little bit of life at this point, is some sort of a production problem somewhere. You look at the Minneapolis wheat market. We are building a very, very strong base right now as far as price is concerned. We continue to keep Minneapolis down at the bottom end of its trading range. I do think that this market will be able to see some sort of a breakout and some sort of a recovery. This is the March contract, and right now I would say the best that we could see probably in March would be something around this 607 area, which would be this line right there. That's likely where we could see it go to. Though we are running out of time for the March contract to be able to see too much of a push. Looking at it for new crop, I do think we've got a little bit better chance. I mean, we're still building that same base. No, that's the same contract. Oh, I guess I got March in there twice. I can't show the September. But September actually shows like it can get back up into the mid sixes, like up to a 635 area. That's where I would look at for something as far as the Minneapolis is concerned. For corn, it really stung us in the January report. What happened was, for old crop, we actually saw some decent numbers, but for new crop, when USDA came in and increased the harvested acres by 1.3 million, that really took the market by surprise. Nobody was anticipating that. The average estimate had actually yield decreasing a little bit and feed demand decreasing a little bit for corn, but instead we saw feed demand go up by 100 million bushels, and we did see, of course, the harvested acres increase by the 1.2. And again, that increase did not come from the Corn Belt. That increase came from fringe states, whereas the excuse that they're using is that it was due to producers seeing such a good corn crop that they did not chop as much corn in 2025 as what they would normally do. The net result is that it increased our stocks by 198 million bushels, putting our stock close to 2.2 billion. So a very large increase that was not anticipated by the trade. And that's what caused the market to go down that 20, 25 cents. Now, when you look at what happened as far as the next month in February, what we just saw here a couple of weeks ago, we saw exports increase by 100 million. So we actually have a record export projections for corn coming in at 3.3 billion. And right now it does look like that's pretty much in line with where we're at for exports, because we do continue to see pretty strong demand on the corn side for exports. Like I said, looking at the numbers, we did see the biggest changes came into place in the fringe areas where, surprisingly enough, North Dakota increased harvested acres by 140,000. We saw Nebraska increase by 150,000. Iowa increased their harvested acres by 200, but their yield was lower and their production still came in below. But overall, it was fringe states that saw the biggest increases for the January report that came in and caused the trouble. When you look at it as far as acres, yield is concerned, the blue is where everybody saw increases from the previous year in their yields or their harvested acres. To the tune that North Dakota saw a surprising 24% increase over the previous year for harvested acres. It's hard to believe we harvested 24% more acres in North Dakota, but that's kind of what the USDA is saying. Set a record for North Dakota. We set a record in South Dakota. We set a record for our acres, harvested acres in Nebraska, Minnesota. So the upper Midwest saw a lot of acres, extra acres coming into play. Now, there was been enough chatter from this that USDA and the Statistical Service has issued or has launched a investigation into how they came up with the numbers and how they were calculated. So it's going to be interesting moving forward if these numbers stay or if there gets to be a little bit of a change going forward. But there is a little bit of question about the methodology that was used. Big picture, though, these are the numbers we got to use because that's the numbers that were put out. So, this is kind of what we have to look at. And that is, a large increase in acres and a production that comes in close to 17 billion, which is by far a record. When you do look at it, we did see larger production because of the increase in acres and yield in most of the big 5 states. Iowa and Illinois didn't see that. But as far as the rest of the states, we did see some increases. So, as I mentioned, it was a record corn crop. 17 billion bushels, shattered the previous record by quite a bit. And it's leaving us with quite a ending stocks estimate. That started the debate in Congress, of course, to go with the voluntarily E15, or at least go to year-round E15 and make it on a voluntary case. It got pulled out of the bills at the last minute because of some southern states kind of balking about having E15 year-round. But it is something that is going to be brought up in front of Congress and trying to get pushed. Now, right now, as far as the nation is concerned, we have about an E11. That's about what the blend is on a national basis. So it's unlikely we're going to go to E15 because of the southern states. California is behind it, though. That's one of the promising things. But it's likely we could push this maybe to an E13 year-round, and that certainly would help. But if we did get E15 by some stretch of the imagination, it would increase our corn demand by about 2.8 million bushels. So it would take the ending stocks estimate that we have for corn away and then actually leave us a little bit deficit. So it is a good way to solve our problem as far as corn stocks are concerned. Now, problem is it wouldn't happen overnight because we do not have the ethanol plants built or capable of pushing our production to that kind of level, as most of the ethanol plants are running pretty close to capacity at this point. When you look at yield, we're pretty close to trendline yield. It's going to be interesting. Now, we do have the Ag Outlook Forum is going to be coming out with their numbers at the end of this week. They're going to come with their 10-year baseline projections on, I believe, Thursday morning. And it'll give us what they think the trend line yields are going to be for 2026. And it's likely it'll be right around this 182, 184 area for corn. What's also going to be interesting is what they come with for acres. Most anticipate planted acres could come in around 95 million for corn. those numbers wouldn't be that bad or wouldn't be that negative as far as corn is concerned. Because if we could get E15, or at least somewhat close to an E13, that would help chew through quite a few of the bushels that we've got. There's also rumors that, as far as the exports are concerned, that China might be in our market. We look at our corn yield, everybody that saw blue, again, that's kind of the theme. Everybody saw increases from the previous year. North Dakota's yield was up 6% at a record 158. South Dakota's was also at a record 201, which that's believable. Southern Minnesota had a good crop for the first time after the last couple of years of not having a good crop. When you look at demand, the light tan line is basically where feed demand is. The darker, the brown line is ethanol. And those are the two that have been making that have really been carrying the corn market. Exports have made a really good recovery and are sitting sharply higher than what we've seen in years. In 2022, we basically were looking at a 1.6 billion bushel exports. We've doubled that in this time frame. And a lot of that demand is coming from one source when you look at as far as exports are concerned. And also when you look at feed demand, that's been kind of amazing that it's been able to hold up, even though we are seeing less animals, less cattle in our feedlots. When you look at our sales for the last 5 years, we're way above our 5-year average. It does look like we will continue to see that as we're still in a kind of an upward trajectory as far as the export sales are concerned. Should start to level this off here pretty soon, but very likely we can still hit that 3.3 that they're talking about, maybe even a little bit better as far as corn exports are concerned. And when you look at it, Mexico, of course, is our biggest one, and they're way above their 3-year average. A lot of their purchasing is coming because of the fact that we've got our border closed and we're not letting their cattle cross into the U.S. So they have to feed them down in Mexico, and they need the product to feed them, and that's where a lot of our corn has been moving is to Mexico. They've been our biggest buyer for corn by far. Next biggest has been Japan, and then Colombia and South Korea. So we've had some really good demand as far as corn is concerned. Now, China officially has not shown up on the export tables, but there are rumors that they have been buying our corn. Last week, we saw reports that they have bought upwards to 45 cargoes of sorghum from the U.S. They had stepped away from that market for a while, but they're buying aggressively in the sorghum market, and they've been buying aggressively in the Australian barley market. That is because of some rumors of their corn not being very good quality, not being very good. Even though they produce more bushels, it's not the quality they need. So they're needing to import a lot of their feed demand from other countries right now. And the rumor is that some of the unknown destination sales for corn that we've seen as of late have actually been China buying. We'll see here as we move forward. They're also expecting that in the April meeting between Xi and Trump, that there will be an announcement that corn could start to become a little bit more talked about as far as exports going to China. Ethanol has really been what's kind of helping, though, to kind of stave off that a little bit. Ethanol demand continues to be pretty strong. The big drop we saw a week ago is when the cold snap came through, and that did plummet the production for ethanol, but we're back up above the pace we need to be at to make USDA's projections. Actually, record high for the week last week. So right now it does look like ethanol production is going to be able to meet USDA's projections, maybe a little bit better than that. And a lot of that is due to not only the demand in the U.S., but because of ethanol exports, which right now a lot of the countries that are signing trade deals have been saying or have been requesting an increase in ethanol as part of what they're looking at to buy from the U.S. So the ethanol demand has been very, very good, and that continues to help push it. Now, the bad part about corn is when we had that sell-off, that's that big dark black line where we pulled back this market. We've kind of put ourselves in now so that we're trading in a trading range. It's about 20 cents less. We have been trading at the top end of that, though, at that 435 level, a little bit below it now after today or today's numbers. This is the March contract again. So right now we get to that 435 area for old crop. That's likely a good spot to be selling old crop corn. We've got a lot of stocks out there. We've got a lot of piles and a lot of bags that have to get emptied out. And now with this nice little weather warm stretch, we've seen a lot of corn start to hit the market, and that's kind of depressed the market here a little bit as of late. But anytime we get up to that 435 level, that is a sell opportunity, I think, for old crop. It's going to be a while. It's going to take until late April, early May before we start to see basis improve and see something happen here. So at this point, if you do have some basis fixed contracts in corn, this time it might be advantageous to roll those ahead to the May instead of selling it and buying call options. It's actually the spread between March and May is a little bit tighter. So it makes a little more sense to go ahead and roll those contracts ahead to the May. I do think we're going to see some life in the corn market. It's just going to take a little bit into the summertime before we see it. And, oh yes, this is the December contract. We've had a nice run up in the December. I mean, that's a steep, but a pretty nice little uptrend that we've been seeing in the market. We got to that 465 area, and that's kind of the line to maybe start selling some old crop or start selling some new crop corn. Basically, we're looking at a $4 cash return to us. Now, I do think we can get up into the upper fours in this market. But again, it's going to take verification of less acres being planted and maybe a little bit of demand from China to be able to push us to those levels. But, we have made a really nice run in this market, gaining close to that 20 cents. So that is a good spot to be looking at least getting a little bit of the new crop priced at. For soybeans, the story is a little different for soybeans. We weren't very optimistic about soybeans coming just before harvest because of China and the trade war, and China saying they're not going to buy U.S. beans. All that has kind of changed in a pretty quick. Markets rallied pretty decent. We're back up to some pretty strong as far as resistance levels, as far as soybeans are concerned as well. Looking at the numbers, USDA didn't make any changes. Even the January numbers weren't that bearish as far as soybeans were concerned, and they made no changes to the numbers as far as February is concerned. We still have stocks at 350 million bushels, but the big news, that's happened as far as soybeans, IRS came out with their 45Z determinations, and they made it, or they basically are saying that the only crops that are eligible for subsidies in the biofuels industry for the U.S. are feedstuffs or products that are produced in Mexico, in Canada, or the United States. Well, that's pretty bullish because right now about 30% of the renewable diesel fuel feedstuff comes out of used restaurant oil out of China. So now they can still make the diesel fuel out of that used restaurant oil, but they're not going to get the subsidy for it. So it now has increased the demand for feedstuffs out of course, like I said, Canada and the U.S. The biggest ones that's going to be is canola and soybeans. That's where that's really helped to push that market or help support these two markets. Soybean oil actually trading to new contract highs for most of last week off of that news. When you look at as far as like I said, the January report was concerned, not a lot of big changes. Yield was not changed, and we did see an increase in planted and harvested acres, but nothing major as far as soybeans were concerned. At least nothing that should have caused this market to see any kind of sell-off. When you did look at it, acres did see a decrease in the big 5 biggest states, but we did see yields improve. Illinois yield was off a little bit, but then we did see some pretty good increases in Minnesota. Again, southern Minnesota had a lot better year this year than they have seen, and Nebraska's yields improved a little bit. Production mixed pretty much across the board, though. When you look at it, not a record crop. It was a good crop. I mean, we're hanging right in there with our average for the last 5-6 years. So it turned out to be pretty decent. Yield came in unchanged for in the January report, which means that it's likely we're going to see a 53 bushel yield for our trend line yield for 2026. The biggest thing is where our acres going to fall. And I think we're going to see an increase in soybean acres just because of a few things that are kind of brewing in the back for soybeans right now. You look at it, pretty much the trend stays the same. Everything blue saw increases, the red saw decreases. North Dakota, one of the only states that saw decreases in the soybean yields, mainly because the frost was a little bit worse for the North Dakota than what we anticipated, bringing our yield down about 8%. So that was a surprise. Probably not to the guys that got the frost, though. When you look at it as far as demand is concerned, the tan line is where we're looking at crush, and that has certainly seen a huge increase over the last, this goes back to 2008. So it goes back, showing it to 2026 all the way back. So 8-10 years. So big numbers coming as far as the crush number is concerned. We had a NOPA crush out this morning, I think it was. And again, it showed the NOPA crush at another record as far as crush numbers are concerned. Exports have seen a little bit of a downturn ever since we saw, the first trade war when we peaked. We've seen them drop off pretty hard and then kind of just shuffle back and forth. We're seeing a little, right now we're looking at about 1.5. I think that number is going to go up. Well, right now it almost has to. When you look at, I got to get back to the one number here, one of the slides. When you look at it, we're looking at an ending stocks estimate about 350 million bushels. Now, China has agreed to buy or has bought the 12 million metric ton. Hasn't been shipped yet. Most of it starts, some of it has, but most of it's going to ship in the April-May timeframe. So that's when I would expect that our basis should start to improve. Right now, we do not have any export demand putting pressure on supply as far as the Northern Plains is concerned. A lot of grain hasn't been getting shipped out of the Pacific Northwest, in other words. So once they start looking at getting their major shipments coming into play, we're going to start to see a little bit more bidding for soybeans from elevators to put into the export market. So that should help improve our basis a little bit. But about 2 weeks ago, the Xi and Trump talked, and Trump made the announcement that China was considering to buy 8 million metric ton more soybeans this marketing year. Well, this is a number that is not anticipated by the trade. It's not part of the S&D numbers. And 8 million metric ton is the equivalent to about 255 million bushels, somewhere in that area. So virtually, if they do buy that 8 million metric ton more, it's going to take our ending stocks estimate for soybeans down to about less than 100 million bushels. That's why soybeans rallied over the last week, is because we don't have the soybeans to make that 8 million metric ton commitment to China. We have to get price up high enough that it either is going to slow down crush or it's going to scare away the other purchases of our soybeans. And what was interesting, USDA made a comment about this consideration to buy these extra bushels in the February crop production report, or in the WASDE report, saying that if China does come in and fill that commitment, it will come off of sales to other countries, because of it basically will scare them away from the market from buying. Now, China does not need to buy these soybeans by it's not economics is why they're buying it. They're buying it off of a goodwill gesture and off of a political statement to kind of appease the U.S. and keep the good relations between the two countries. It's also estimated that once in April, when Xi and Trump meet, that there will be more of an announcement of some sales being made. They're thinking that it's possibility that we could see the 10% tariff taken away. So there's a lot of speculation about that meeting and what could possibly happen. So right now we are looking at, like I said, our exports have a potential to see a little bit of an increase. Crush right now is seeing a pretty good push. It's unlikely, or it's likely that we'll continue to see a little bit more run. Exports, as I mentioned, are sitting down about the low that we've seen in the last 12 years. Looking at where we're at as far as the 5-year average, We're quite a bit below right now. I mean, it does look like we could make that 1.5 billion, but if, like I said, China comes in, this is going to push up quite a bit and then see a little bit more of an increase. I don't know if we'll lose those other customers or not, but it's potential. When you look at as far as what China's bought, they did not buy anything from us up until about 2 months into the marketing year. Then they bought a little bit, and they've been steadily buying since then, to the tune of about 400 million bushels, when they're normally buying close to 800 to a billion bushels from the U.S. Now, what's interesting is when you look at soybeans now, they get this 8 million metric ton they're talking about. They promised to buy 25 million metric ton for the next 3 years. So that kind of levels off the demand for soybeans for the next 3 years. And it makes it so that we're somewhat stable as far as our demand is concerned. Crush continues to see an expansion of about, close to 100 million bushels a year. So we actually will see somewhat of a stabilization as far as demand is concerned, which will be supportive to the soybean market and help with some acres. When you look at as far as where our demand or where our exports are going, even though China's not that big into the market right now, they're still the 800-pound gorilla. They're still buying more beans than anybody else. It's said that right now, 50% of Brazil's total soybean demand is China, and 1 out of every 4 soybean bushel in the U.S. goes to China. So they're still a very big buyer, very big as far as the soybean market is concerned. But you can see that every country, pretty much other than Indonesia, has seen an increase or has increased their purchasing of U.S. soybeans, mainly because we have more soybeans to sell with China not being in our market as much. And as I mentioned, crush continues to be very strong. The gray bar is the record crush amount for that month. The black line is where the crush was in 2023. The blue line is where crush was in 24. We set records every single month except for February. That was a little bit off. And then the red line is where we are so far this year. This is off of the census crush, which is all of the crush that soybeans that are crushed. And right now, NOPA came in, and that was up around 220, somewhere in that area. So according to this report, January is likely going to be a record for the crush numbers as well when we get the full crush numbers in. And soybean oil, when you look at where the soybean oil demand has been, biofuels has been by far the largest increase for the demand. We still continue to see food demand as a pretty big one, but it's now the biofuel side has overtaken it. And with the IRS coming with their 45Z numbers, that certainly has helped to encourage a little bit more on the biofuel side. And it's expected that EPA is going to come with their volume obligations here soon. And they're supposed to be somewhat friendly to the marketplace. And that's been kind of coming in and help support the market as well. When you look at it as far as where production's at, South America is the blue line. Argentina is red, the U.S. is green, and you can see that South America is, we were pretty neck and neck there for from 2011 to 2018, and then they've kind of taken off, and we've kind of stabilized. Argentina has always been fairly stable. I mean, weather is what impacts them more than anything as far as their production. When you look at exports, again, we were pretty close with China in the early 2010s, but in about 2015, that's when China made the conscious decision to start switching their demand from the U.S. to Brazil, and that's what's happened. Since when was our first trade war? 2022? 2018, somewhere in that area. China or Brazil has added 30 million acres of soybeans since the first trade war. Think of that for a second. That's a lot. And that's what's helped them to kind of take over and kind of lead us as far as exports are concerned. And again, Argentina does not export whole beans. They're not much of a threat. Other than this last year, they've actually started to export a little bit more. When you look at the ending stocks estimate, again, Brazil is sitting on most of the stocks at this point. U.S. is sitting a little bit smaller than the rest, even than Argentina, as Argentina holds their beans mainly because their soybeans have value, their dollar doesn't. So that kind of keeps them to hold theirs. And then they're also crush most of their soybeans, so they actually have a little bit more of a year-round demand for their soybeans. The scariest part is when you look at what the potential is for Brazil, and this has been talked about a lot. They actually read an article this afternoon from Top Producer, and they had some people from China and some people from Brazil on this panel. The guy on the panel for Brazil said that there is 70 million acres of degraded pasture that is ready to be broke up and cropped. 70 million acres is a lot of acres. When you look at it, it's almost equal to what we plant for soybeans. I mean, our soybean crop is 85 million. So you can see that they basically have the U.S. crop. They brought that 30 million that I talked about, the 30 million acres is the equivalent to the U.S.'s 4 largest soybean producing states. That's what they brought in just since the first trade war took place. So they do have the capacity to expand their acres quite a bit. And you can see that the darker green is where most of those acres fall, which is in some of the better producing areas like the Mato Grosso, which is here, the Mato Grosso do Sul, Goiás, whereas Paraná isn't as much. But they do have the ability to increase their acres quite a bit in a short period of time if they wanted to. And these are pasture land acres, so that they're basically ready to break up at this point. When you look at the soybean chart, as I said, we've had a really nice recovery. This is when Xi and Trump met, is when we had that gap. We rallied up, and when we didn't get confirmation, we kind of fell back off again and traded in a stagnant manner. Since then, we have rallied. 1140, 1135 was actually some pretty strong resistance. We haven't been able to close above and stay above that level yet. If we do, I think we open this market up to see a run to that $12 area, because there's not much between 1140 and 1135 and $12. So I would expect that we could see the market be able to rally up to those levels for old crop. For new crop, I would be pricing some old crop soybeans though here at this 1135 to 1140 area. For new crop, right now we're flirting with that 1117 area. Again, 1135, 1140 area would be a level to maybe look at advancing some sales or doing some sales. And then after that, you'd be looking again at $12. But it's been a nice little run, a nice time to, I think, reward the market once we can get back up into these little bit loftier areas. It has helped as far as crop insurance is concerned, as Amy was saying, that we could have a $11 base price for crop insurance, which is going to be pretty attractive for soybeans if we can get to that level. So looking at some of the other crops, canola, we actually did see lower acres, but we saw a record yield. Production was down a little bit. Canola does look like it's going to see an increase in acres in the U.S. this year just because of the strong yields that we've been able to get, especially up in the northern regions. I was surprised to see dry edible beans saw lower production, lower numbers all the way across the board. Those we haven't seen very good contracts come out yet, so that's something that's a wait and see right now. Sunflowers, huge increase in acres, but it's only made up because of that high, because the previous year was so low. But we did have a record yield, I think it was, for soybeans, and production was up quite a bit. Right now, because of the push in bean oil, we are seeing some very attractive crop insurance prices for sunflowers if they can continue to hold here over the next, I think, 10 days for prices to be set. So keep talking about exports and how important they are. This kind of shows us just how important the export market is. This gives us an idea of how much of the crop we actually have to export. For cotton, we have to export 88% of what we produce in the U.S. For sorghum, we have to export 52%. Both of those, the biggest buyer is China. Wheat is 45%, rice is 43%, soybeans is 37%, and then corn comes in at about 19%. So corn is not an export dependent market, but the rest of these markets are very, very dependent on exports. So, and that's what I got. If there's any questions.
Yep. If you have any questions for Randy, you can put them in the chat.
if not, we can.
So how much do you think spring wheat acres are going to drop with those lower prices and the?
Right now, I guess, I think we're just around that 10 million, 11 million area. I would expect that we could see a 3 to a 5% drop, which would be, 500,000 to 750,000 acres.
We don't have any questions, so thank you for joining us tonight. Of course, if you've got questions, you know how to find us. Give us a call in the office tomorrow. And again, thank you for joining us tonight.
Thanks.